Welcome to another installment of how to get started as a passive investor. As people file into the room, would somebody jump over to the chat box and just let me know that you can hear me and see me? That'd be fantastic. Always nice to know that our technology is working before we get started. Awesome. Thanks so much, Eddie. So if you haven't joined us for one of these episodes in the series, just know that I'm recording this and I'm going to send out the replay to you. Also in that replay email will be a list of other videos for you to review. So, especially if you're, new to passive syndication or fund investing, you can kind of cut your teeth on those videos. Also, I'm going to give you guys a little slide later on in this presentation that will be that help you kind of organize which videos should I watch first. Okay, so watch out for that as well. But I do this series, maybe you're here because you've tried passive investing before but just got cold feet, or you actually have invested in a deal and you realize, oops, I made a mistake. Or maybe you're just so overwhelmed by all the information out there that you're just not even sure where to start. If any of this applies to you, then you are in the right place. So today we are going to tackle some big questions around cash flow versus gains, like which is the better strategy to invest for investing. But before we kick off that topic, we're going to learn one of the biggest myths that investors have that keeps them sidelined from investing passively. Then we're going to dive into, what does it mean to invest for cash flow? What does it mean to invest for appreciative gains? And then we're going to kind of give you a little bit of a primer to have, so you can look at a deal and understand which type of strategy might actually fit for you. Okay, because not everybody's investing strategies are the same. Okay. Just because my neighbor might be doing one thing and he's very successful at it, doesn't mean that actually it applies to my life situation and my goals. But before we dive into our content, let's rip off the Band-Aid and really pick apart one of those myths that investors tell themselves, and especially as it applies today. One of the biggest lies that investors tell themselves and keeps them sidelined from investing passively is that they think they won't make that high of a return on the investment. And that can be the case, but again, we're here to arm you with information and arm you with the tools so that you actually can get paired with the great operators in the right markets that are operating the right strategy that you want to see, and help you leverage your money to make the returns that you want to see, whether it's cash flow gains or some sort of mix of the two. And then there's always the return on our time, right? Because one of the amazing things about passive investing is that you can actually, invest your money. Okay, you take your, the dollars that you've traded your time for, invest in an asset, in an operation team, an operating business, and continue to work your day job where your highest and best use of your time is, in order to continue to feed that investing strategy. Unlike some other real estate strategies that actually require a large amount of your time to actually operate the strategy, maybe like fix and flipping, searching for turnkey deals or the like. Okay, so it's not just all about the money. What is the return on your time worth? Okay. But before we dive down our content rabbit hole today, if this is the first time we're meeting, my name is Whitney Hutton. This is the reason why I invest passively, me and my crazy crew. I started off real estate investing in 2002, living, flipping, and house hacking, and did quite well actually. Building up buckets of equity, but what I didn't have was passive cash flow coming in that helped me. I wasn't able to unlock those golden handcuffs from my day job, job, in order to step into the life that I knew that I deserved. And it took me a few years to realize how to transition this equity into passive, more passive investments. I started off, with 30 single family houses, many of those a rehab strategy, recycling my equity over and over. And then my husband and I were doing fix and flipping on the side to continue to build up our equity base. But it was really when we learned how to invest passively in real estate syndication deals and fund investments, that's when we blew the doors off of the growth on our portfolio, because we unlocked our ability to make money from time. Okay. So I'm going to kind of set that topic down a little bit, but amazing work here with Goodegg in the past 2.5, almost 3 years that I've been working with them. We have grown over a 26 multifamily property portfolio. We're about to close on 27 and 28 here in the next month. We're super excited about that. If you're interested in investing in a multifamily deal, I'm going to share with you my email. Ping me, because we might have a spot available in that deal, and depends on when you're watching this. We have also invested in 2 self-storage deals and a mobile home park. But in total, we have over 6,700 multifamily units under management and an $800 million portfolio. But what I get to do here on a daily basis is work with you, the investor, helping you navigate this wonderful world of passive investing in the most efficient and effective way possible. As promised, I told you that I would give you a little bit of a primer on what videos we've done to date. And, if you're just kind of new to passive investing world, like, where should you even start? Well, when you get that, if you're on our mailing list, okay, so make sure to sign up. If you're not already on there, I'll tell you how to do that here in a minute. Make sure that you look for these videos. So go ahead and take a screenshot of this slide, and this will give you a nice base on passive investing, okay? A nice firm foundation of education that, quite honestly, many investors get into this world and they never learn. And so you're smart, you're investing your time here for you, so make sure that you watch these videos. And again, we have a huge library of other videos for you to consume as well. Well, let's dive into our topic today, okay? Which investing strategy is right for you? Should you invest for cash flow? Should you invest for gains? Okay, so anything that we cover in today's webinar is educational. So make sure that you take this information back to your professional team, okay? We might talk something about legal, financial, or tax advisory. Guys, laws are always changing, rules are always changing. So make sure, depending on when you consume this content, take it back to your team and make sure that you understand how the information that we disclose here applies to you, okay? So, which investing plan you should have? Well, let's kind of define them. Let's put them in a box, so to speak. If you're investing for gains, okay, this really means that you're in the art of buying and selling assets for a profit, okay? So you're not concerned about holding on to them to get a constant return, okay? You're holding to get that profit on the sale, okay? If you're investing in a more cash flow plan, this is really the art of buying and holding an asset with the expectation that it generates a constant return from you. And more than likely, this constant return is going to come from rents, okay? So that increase in income. It can also come from, decreasing your expenses and adding additional streams of income, but the real power here is through increasing those rents. And, that return can come monthly, quarterly, or even annually, okay? So those are really the 2 buckets that we have here, but let's dive a little bit further and kind of pick these apart. So if you're investing for gains, okay, that large chunk of profit, okay, essentially think of it as more of a flipping or developing real estate. There are some things, in order to succeed in this plan, you have to understand. Okay, number 1, especially if you're doing any sort of development or rehab, you have to know the true value of your asset as it is right now in today's market. But also, once you complete your business plan, what is that true value of that asset going to be at that other point in time? Okay, if you don't understand where you are right now and where you're going to, end up in the market, that is what we call a business risk. Okay, that can be a huge risk. And that's how, back in 2008, 2009, fix and flippers got in big trouble, is when the real estate market dropped out from underneath them, asset prices fell, they were left holding the bag. And their plan was to invest for gain. and that was the only lever they had. And when that future value of the asset fell, they got caught in a pickle. Okay. Now there's some ways to mitigate this, and we'll talk through that here in a second. You also have to understand your market trajectory. Okay. Where are you in the market cycle? Is the market going up? Is it stabilized and plateauing, or is it going down? Okay. You can make money through appreciation in any one of these market cycles. You just have to know what part of the cycle you're in order to buy correctly. All right. You also have to understand your investing criteria. Okay. What if you're going to flip the property to another user, the buyer, you have to understand what it is they want. What will they buy, purchase at a premium for? Okay. And once you understand that, that feeds back into your investing criteria. Okay. If you purchase an asset and nobody wants it, that's a problem. Okay. You can't, investing for gains will then not work very well. Okay. So you have to have a marketable asset. All right. Now, number 4, you have to have cash flow coming in from other sources to support the asset, right? Because remember, if you're investing solely for gains, that property is not generating income for you to cover the expenses. So you have to have some sort of other income coming in. It can be, from another business that you have. It can be from your day job, whatever. But you're going to have to float the asset until you complete your business plan in order to sell. Okay. Number 5, you have to understand, to be successful at your gains plan, you have to know when to sell the asset. Okay. So ideally you would sell the asset when you hit your desired sales price. And also, if the market turns on you, you have to know when to get out. Okay. You don't want to be left holding or trying to catch a falling knife, as they say. So you have to understand where you are in the market cycle and have a couple different contingencies or points of exit to know when to get out of that market. But hopefully you've timed everything on your market trajectory. You know the true value of the end asset. You have a buyer who you truly understand their investing criteria. You've been able to float the asset the entire time, and you can hit your sales number at the end. Okay. Now the cash flow plan, a little different. Okay. Remember, this is the art of buying and holding the asset with the expectation of generating a constant return. All right. Now this plan, we have to have an entirely different mindset. Okay. This is not about timing the market. Okay. Cash flow, this is about the long-term prosperity of the asset. Okay. So this, you don't buy an asset only to hold on to it, like maybe even 3 years in the cash flow plan, because really you're in it for the longevity of the hold for that asset to generate cash flow for you to be able to bump up rents, stuff like that, in order to really, make an impact in your financials there. The cash flow has to be able to sustain future improvements in order to provide a return. This is where, especially in the single family, small multifamily world, I see investors kind of go a little off track as they get so enamored by the cash flow of the asset right now, and they don't fully model what has to be done to the property to upkeep it, maintain it, or improve it for a future sale. And then things start going wrong. They have to replace the roof, maybe all the HVAC systems or the water heaters. And now they have all these capital improvements that have eaten into their cash flow. All right. So the cash flow has to be able to sustain future improvements as it is right now. Okay. All right. We have to be able to, assess the longevity of the yield. So we need to be able to understand, where is this property in the market cycle? Will we be able to continue to reasonably expect for the growth of that asset in both cash flow and rents to continue? Okay, so we want to be able to assess the longevity. Also, we have to understand the type of debt being used on the property. Okay, this is, I think we all remember 2006. What got people in a pickle is they purchased a property. They had these low adjustable rate mortgages. Everybody was fine and dandy. They could cash flow it now. But when those rates started adjusting and the banks started, jacking up the rates, on people, all of a sudden they couldn't afford the property anymore. Okay, so you have to understand the type of debt being used and how it impacts the cash flow of the property. This is why it's so attractive to lock in long-term agency debt or long-term commercial debt on the property. The 30, especially on single family, small multis, 1 to 4 units, that 30-year fixed interest rate loan is amazing because we're locking in our debt now, which, quite honestly, it itself can be an investment. All right. Now, we've covered the gains plan, right? How can you make large chunks of profit? And then the cash flow plan, which is something more like how can you put your money in your pocket consistently every single month. Now, I know when I talk to investors, I will ask them the question, do you want to invest for gains or do you want to invest for cash flow? Because we need to understand if we, as a sponsor and a limited partner investor, if we're aligned on our investing goals. But here's the beauty of it. These don't have to be mutually exclusive. Why not do both? Why not invest in assets to do both? Okay. Now, generally when we invest for both, we are going to hit kind of a mid road of, we're not going to hit like, huge, gains out of the park, and we're not going to, tap into like massive cash flow. We're going to have a nice balanced blend of both. Okay. This is what I feel passive investing is all about. Okay. How can we make money for both the short and the long term? Now, why do I love this? Okay. Again, this investing strategy works for me. Does it work for you? That's the question. I love it because the cash flow gives you a steady income coming in every single month. Above and beyond, you can pay for the expenses and you can put some in your pocket every month. Who doesn't love having that steady flow of income coming in every month? The gains, on the other hand, allow me to continue to build my wealth at a faster rate than just waiting for cash flow to accumulate over multiple years. Okay, if I can harvest the appreciation, the gains on these assets, and continue to bump up into larger assets or more assets, I can continue to increase my cash flow and increase my potentials for gains. Okay. The other thing about cash flow is that it allows me to kind of step back from the business plan and make logical decisions about where in the market that I need to sell the asset, be it, my current position and my future gain strategy. Okay. I'm not under the pressure to have to sell the asset because I'm running out of capital to support it. The cash flow allows me to, detach from that potential pain and just say, hey, the asset's cash flowing right now. It pays all the expenses. Is this the right time to sell? If it is, amazing. If not, great. The asset's cash flowing. I'm going to hold on to it until the market turns back around in this area. All right. So really, I just love, working with investors and helping them kind of understand where are they, what do they need in their what type of investing do they need to actually help them meet their goals? And this is one powerful question that I love asking investors. So if you guys have questions, jump over to the chat box, type them in. I will do my best to answer as many questions as we possibly have here. And if you're interested in seeing our deal flow, jump on over to goodegginvestments.com/invest. Take about 30 seconds, fill out our quick little application there. That just helps us understand who you are as an investor, what are your goals, and just really kind of gets us teed up to have a great conversation. And the Goodegg Investor Club is for anybody, whether you're just starting out in investing, doing this on the side, or you're a pro and you have many investments under your belt and doing this more full time. Anyways, as promised, here is my contact information. If you guys have any questions, jump on over the chat box. We've got some time. Let's knock our questions out for today.